Drake just applied for a car loan. Got denied. He has no idea why. He's never missed a payment in his life. Daniel's credit score just jumped 31 points. He didn't pay anything off. He didn't open a new account. The rules simply changed, and he was ready for them. Credit scoring rules have quietly shifted in 2026 in ways that will help millions of Americans and hurt others. Here's exactly what changed and what you need to do about it. Before we get to the changes, a quick foundation. Your credit score, whether FICO or VantageScore, is calculated from 5 main factors. Payment history is the biggest, 35% of your FICO score. Have you paid your bills on time? Every late payment hurts this. Credit utilization, 30%. How much of your available credit are you using? Under 30% is the target. Under 10% is ideal. Length of credit history, 15%. How old are your accounts? Credit mix, 10%. Do you have different types of credit? Cards, a car loan, a mortgage? New credit, 10%. How recently have you applied for new credit? Each hard inquiry can temporarily lower your score. Most lenders use FICO, but VantageScore, the alternative model, is now being used by mortgage lenders for the first time, following a mandate from Fannie Mae and Freddie Mac. That's a big change, and it matters. Here are the key changes in 2026, in order of who they affect most. Change 1. Medical debt under $500 is now removed from credit reports entirely. If you had a medical collection under $500 dragging down your score, it's gone. Paid medical debt of any amount is also no longer counted in the newest scoring models from VantageScore. Wait, I had a $200 medical bill in collections from 3 years ago. That was hurting my score? It was. Under the new rules, it's no longer reported. Your score may already be higher than you think. Change 2. Buy now, pay later, or BNPL, loans are now reported to credit bureaus. Services like Afterpay, Klarna, Affirm, and Zip now appear on your credit report for many users. This cuts both ways. If you use BNPL responsibly and pay on time, it could help your score. But if you have multiple open BNPL plans, which Drake does, that's new debt showing on your report. And if you miss a payment, it now counts as a missed payment. I use BNPL once a year, maybe, pay it off immediately. Low risk. Change 3. Rent and utility payments can now boost your score. VantageScore 4.0 considers positive rent payment history. If you pay your rent on time every month, you may now get credit for it, especially if you have a thin credit file. This is huge for people who are new to credit, immigrants, young adults, or anyone who rents and pays on time but has limited credit history. You've been building good financial habits, and now the scoring model can finally see them. Change 4. Newer FICO models are being adopted in mortgage lending. FICO 10T and VantageScore 4.0 both give more weight to payment trends over time, not just your balance today, but whether your balances are going up or down. Paying down debt consistently now helps you more than just having a low balance at a single point in time. Let's get back to Drake. He never missed a payment, so why was he denied? I don't get it. I always pay on time. Turns out, Drake had 4 active BNPL plans open at once, for a TV, a gym membership, a phone case, and something he doesn't even remember. Under the new reporting rules, those show up as open accounts with balances. His utilization went up. His score dropped. He also had a high credit card balance, 78% utilization, which is the single biggest controllable factor dragging scores down. And he'd never looked at his actual credit report, not once. Daniel monitors his credit quarterly. He uses the free service at annualcreditreport.com, the only government-authorized site, to pull his full reports from all 3 bureaus, Equifax, Experian, and TransUnion. Takes about 15 minutes. I check for errors, old accounts, anything that shouldn't be there. His utilization is under 15%. He has 1 BNPL plan open at a time, paid off before the next statement. And because he rents his apartment and his landlord reports to the bureaus via a service called Rental Karma, his on-time rent payments count toward his score. His score jumped after the medical debt changes hit, Not because he did anything, but because he had one small paid medical collection that was quietly dragging his score by 18 points. Gone now. 3 things you can do right now. 1. Pull your credit reports at annualcreditreport.com. Free. No credit card required. Check for medical collections under $500. They should be gone or disappearing. 2. Audit your BNPL. Close any you're not actively using. Keep open BL plans to a minimum and pay on time. 3. If you rent, sign up for a rent reporting service. Rental Karma, Boom, or Experian Rent Bureau can add your rent history to your report, sometimes for free. Here's the 2026 credit score summary. Medical debt under $500 removed from reports. Check your score, it may already be higher. BNPL loans, now on your report. Pay on time, keep them minimal. Rent payments can now help your score. Sign up for a rent reporting service. Newer scoring models reward consistent downward debt trends, not just a single snapshot. And always pull your free credit reports at annualcreditreport.com. Not a third-party site, that specific one. No credit card required. This video is for educational purposes only and is not personalized financial advice. If this helped you, subscribe. We post a new personal finance video every single day. Next, watch our video on what to do with your money if a recession hits. Because the economy right now is sending some signals you need to understand, and it pairs perfectly with what you just learned.